Hello guys, welcome to a new video. And as you know, Nvidia is going to do a stock split finally. This was in the books for a very long time, and they're going to do 10 for 1 stock, and that would mean basically right now it's hovering around, I believe, 1200. And once the stock split happens, this stock is gonna be 10 to 1. So if you own one stock, you're gonna own 10 stocks, and that will be a $120 stock Nvidia after the split. So how exactly you gonna take advantage of this, right? How you gonna make profit of this situation? So that's exactly we are gonna discuss in this. I'm going to give you two strategies that I have in my mind that can benefit you from this event, and we are going to take a look with a quick demo as well. So if you are interested in all that, then please stick around, and with that, let's start. Okay guys, so I'm in my computer screen, right? And the first one that I want to discuss is this semiconductor ETF. If you don't know about this one, I know we are talking about Nvidia, but why I'm talking about this is related to the strategy that we are going to discuss, right? So instead of using Nvidia, we are going to use this particular ETF, which is basically a semiconductor ETF. And if you look at their holdings, right, Nvidia comes at the top. They are basically having almost 1/4 of this ETF is consists of Nvidia itself, right? So that means Nvidia has a huge influence on this particular ETF. As long as Nvidia moves up or down, this ETF is gonna kind of form the same kind of graph that you would see on this ETF. But this is slightly safer than Nvidia because it is not directly depends on Nvidia. It has other semiconductor names like the Taiwan semiconductor chip, and it has Micron and all the other semiconductor related companies, right? So how we are going to exactly use this for the Nvidia event, right? So that's exactly we are gonna look at that. One key point in this strategy is, right, what I'm making use of is this is an event that's gonna happen, right? And as it run up to the event, stock is gonna go high. As you can see, right, this is moved up significantly today, and it could after the event most likely it could go down. So but there is one thing that stays common, that is the volatility, right? So if I go to the option chain here, and if we look at let's say we are going to sell a call, right, for next week. So if you do sell a call, let's say we do 270 here. If you look at the implied volatility, right, for a ETF, this IV is slightly on the higher side. If you go more closer to the money, that you can see exactly here. So if you look at, right, the IV for a ETF, it is pretty high compared to its usual IVs, right? So that's what we are going to take advantage of this event, because after the event volatility goes down, and with that the option premium also goes down, right? Okay, so first thing that you need to do is yeah, as I was mentioning, right, you do sell a call. And I have selected a week here because the event is 7th June. So beyond that, it's not gonna make much difference. Whatever volatility that I was talking about, right, that's gonna make impact mostly on during up to the event. But beyond that, you can go 2 weeks, it's not gonna make much difference in your premium. So that's why I'm selecting 1 week. And I'm selecting this 270. I was doing some research before recording this video. So this is the delta I kind of stick myself to. This is a safer delta in terms of as you can see, right, 0.11 or 12 is my delta range. So I'll just select that. So this is a sell call you do, and then the second step is you do a buy call. So that would be 275 here. So as you see, right, it shows here in Robinhood, it's a call credit spread. So this is one part of the strategy that we are discussing, right? The second part is the interesting one, right? In this case, as you can see, you are still kind of having some like a loss potential here that you see. How we are going to kind of reduce this potential and increase our profit, right? So that's what we are going to do here. So for that, what you do is you essentially sell put below the current price, right, which is right now it's trading around 253. So you do sell again delta wise. I'll keep myself around this kind of delta. I can go one below two, but I'll keep here because see, it's continuously moving, right? So that's why the delta is also moving along with that, but this is okay delta. If you want to go more safer, you can go below, but remember, a premium is gonna take a hit little bit, so I'll just keep it like this. And then you have to buy a put right below. You keep $5 strike price because that's easier to close or open your trades. If you go this one, right, in this kind of strike prices, the volume is little low and it becomes difficult to close the trade if you want to close early, right? So that's why I stick with the whole numbers, especially the $5 difference. That's a sweet spot. So 235 I'll do here. And now see the credit, right? So earlier you were getting around 33 bucks, right? That has been doubled here. So you are now getting credited 75, but your total loss is also reduced, but the overall collateral, you are still gonna put collateral of that $500 you need to execute this trade. And if you look at the graph here, right, that you can clearly see, right? So you are kind of covered both sides, and this is your profit range. So you have a huge range here that you can profit off from. So as long as Nvidia stays below this wide range, right? So your short range here is 235. You are on the upside, you have this 275, right? So as long as it stays between 275 to 235, which is a kind of very wide range, right, if you think, and as long as that holds true, you are gonna profit out of this, right? So this is a very good strategy for small accounts. If you have a small account, you only need $500 to execute this particular trade. And remember, you don't have to wait till 6:14. You can always close this right after the event, because after the event the IV goes down, your premium goes down. You can close this trade right off that, and you're gonna still benefit from this. So that was my first one, and now moving on to the second, right? So the second one I'm gonna touch upon Intel, because this has been in my radar for quite some time. And as you know, they've recently announced a new AI chip, right? And to basically do a competition with the Nvidia and AMD, because they are the leading player right now in the AI space. So Intel is kind of leaving is running behind in terms of the AI space. So that's why they are pushing themselves further in this AI race, and they have announced AI. So I expect Intel to also move. Right now it has not moved that much, and remember, the Intel is a pretty old player in this, and they have pretty stable in terms of, if you talk about the revenue flow, right, and the price to earning ratio in terms of Nvidia or AMD, they are high growth kind of stocks. Intel is not in that space, but if you combine this with their new AI thing, this kind of gives you the best of both world, right? They are a stable company and they have a stable revenue growth, plus they are now moving aggressively themselves to the innovative space that Nvidia and AMD already is in, right? So that's gonna give Intel some advantage. So how can you make use of this new Intel announcement, right? So one way, and I'm going to do it pretty safe way in this, if you do not want to own this, because if you want to own Intel, let's say if you want to do any option strategies, you will have to own 100 shares of Intel stock, right? So, and if you do not have $3,000, what you can do is you do play safe for that you can go, you buy a call, but you buy a far out in the money, right? So you basically let's say Jan 2025, right? So that's almost 226 days, and in this one you go down about delta of, let's say delta is here 83, right, which is basically for a dollar move you are gonna profit this 83%. It's gonna move, so every dollar that the stock moves, your option price would move by this much, right? So that's how the delta affects the option premium. So for this one you only need $745, but your exposure to stock is still the same as outright owning, right? So as let's say $1, if the stock moves, this is gonna move by 83 cents here, right? So this is gonna move to somewhere close to 75.5 something. So you are still getting that same exposure. It's just that you don't have to have that $3,000. And as I said, long term I am kind of a bullish at this point on Intel, and to make use of that, this is a perfect one if you do not have that much capital. So you can use that. In this case also, if you see the graph, you have unlimited profit potential as long as Intel moves in upward directions, right? And you can always close this if you see that it has gone up too much one day suddenly between now and January. You can always take your profit and move to a next stock. So that's option is always there in this strategy. So those were the two strategy that I wanted to discuss, guys, and obviously you can because this is Nvidia event, you can obviously play these strategies directly on Nvidia, but remember there's always a risk playing directly in Nvidia, and if you want to play safer, you can move away from Nvidia, but you still get exposure through these strategies. So that was my idea about making this video, guys. So if you have liked this video, please give a thumbs up and subscribe to the channel, guys. I have a lot of other videos related mostly to the options, and I'm sure you're gonna benefit with all that. So I'll talk to you in the next video, guys. Till then, happy investing. Bye bye.